Let's face it, guys, 90% of day trading strategies, they simply do not work because they're optimized for dopamine and not actually consistent, sustainable, compoundable results, unlike the strategy that we're going to be hearing about today, which is my classic textbook model number 3. So let's dive into it right now. What gave me the conviction live time? Why was it a light bulb moment? Why did I see it as a high quality scalping buying point in the market today? And why did I sell when I sold? Well, first of all, okay, I'm pumping up my strategy and saying everything else sucks, right? That's what it sounds like. But what actually sets this apart from everything else, right? Why am I able to trade this model so consistently just like this? It's very simple. If you look in the Discord, you're going to see model 3 and 4 track record. This thing is proven through data year after year after year, the same repeating model over and over and over again. There's data and actual statistics that give me conviction in live price to take these trades consistently and make money just like you see here on a AMP live account. So with that in mind, I guess let's go over the P&L before I get into everything else and give you guys the sauce, I guess. Here we're looking at May. Obviously, we're starting it off beautifully. I'm paid very, very nicely. And honestly, it's just been an upward slope ever since March. So, I mean, you see April here, I was paid very nicely over $5,000 on just this one live account. March was a different story, though, obviously. I mean, it wasn't red, but it definitely wasn't what I was looking for either. I struggled a lot. It was very difficult. We were inside of a really range-bound market, right? But ever since then, we kind of just are right back on track, you know, back to normalcy. And I'm grateful for that. So here is how we're kicking things off in May. So to kick things off, we're going to be looking and starting at the daily chart. And this is where I'm always starting when we're in a trending, you know, strong market, right? So when we're on the daily chart here, it's very obvious and clear to see. And this is the first thing that I'm identifying. What is the overall order flow and market structure? Okay. Now, obviously it's bullish. Okay. So my job here is I want to stay in sync with that, right? So I'm going to have the highest probability, no matter what the setup is, no matter if I'm scalping or swing trading, it's going to be a lot more beneficial and easier and lower resistance taking longs in sync with this trend, okay? So with that in mind, I'm also identifying key levels. For example, I have this imbalance in price mapped out. Why is this important? I use this today as my key level. So as we drop down on today's daily candle, we hit that volume imbalance. And when we hit that, that's when I began my hunt for my model number 3 today. So let's go ahead, drop down a time frame. And as you see, when we dropped into that daily key level, right now, before I go even further, let me get our indicator out here just so I can guide you guys step by step. Okay, so simultaneously, as we're hitting that daily inefficiency, imbalance, whatever you want to call it, we're also sweeping out a key time-based low. Now this is a time-based low simply because this formed based on US and Iran news-based movement right here, right? News-based spike in price dropped us to the downside and created this news time-based low wick. So as we're diving into that daily inefficiency, we're also sweeping out such a key low in the market. So this combination right here alone is very, very powerful. Now, before I get into the really, really important stuff on the lower time frames, when I'm looking at the hourly chart, right, anytime we have an unfilled hourly gap above us, this always gives me more conviction on my model number 3 if I'm longing, right? So right here, you can see this hourly balance left behind in price. 15-minute chart. Now, the 15-minute chart was very, very, very useful today, okay, and I'm about to show you why. After we hit our key levels and swept out this key time-based news low here, what we did after was very important. And the only reason why all this analysis and stuff like that on the 15-minute chart that I'm about to show you matters is because we hit logical levels inside of a narrative that fits a potential long to a generated Model 3 target, right? So there has to be narrative and logic behind it. It can't just be some random, you know, hindsight cherry pick stuff that doesn't actually work over a long-term spread. So with that said, what's beautiful here is that we create this 15-minute structured swing low. A 15-minute swing low formation, just like this right here, is something that you always want to see when you're taking a model number 3. You want to see that third candle in the swing point close with a strong solid body, and we got that right here. 15-minute swing though formed after hitting a key level. Super key combination right there, and we have a solid body close. Now before I go down to the lower time frames, there's one more thing that you'll notice. You'll notice that this model number 3 target that I've annotated here, right, which I'll get into in a minute in the lower time frames, notice how it's nested beautifully inside of this 15-minute imbalance as well. Now I showed you the hourly gap, right, which is this green shaded box, but you also have this 15-minute imbalance nested inside that model 3 target. That right there, and this is just a small nugget that I'm throwing in, that is always a beautiful, right, very high quality phenomenon in the market that adds to the probabilities of your model number 3 target getting hit. Imbalance coupled with the model 3 target. Now that we have this structured 15-minute swing low, let's go ahead and jump down to the 5-minute chart. So what I'm looking at here, number one, now you can see this double top here on the 5-minute chart, right? We dropped off significantly, generated a double top, came down one more time, hit a key level. Boom, beautiful. Then you see this right here. Along with that 15-minute swing low formation, you see that we created this inversion fair value gap. We bodied through that with ease. Once we came back down, that's where I longed. Okay, beautiful inversion fair value gap entry. Bringing our attention back to the key recipe that makes a quality model number 3. I'm going to direct your attention to this 930 opening. Okay, and as you can see, and as I always tell you guys, your most optimal longs will always be below this 930 opening price. We have this 930 opening price, huge dump down below that, and here we have it. Now I can check that off. Manipulation at or below midnight / 930 opening. Boom, beautiful. Now, for the checklist completion's sake, there is one more thing that I missed here when I was talking about this 15-minute swing low formation. We did have a clear change of state delivery right here, right above the opening price of this down candle there. So you can check that off of the checklist. Okay. All right. So now obviously I said about this 5-minute inversion fair value gap. I did use that as my entry today. We didn't have the highest open interest volume, right? For me to be like on the 1-minute chart, doing a bunch of analysis on it. Okay. So the 5-minute chart was definitely my best friend today. When we inverse this with a strong solid body close and we retraced, boom, again, that was my long entry. Now, for the actual technical entry, right, it was this 3-minute fair value gap, okay? Now, as my model states, right, you want to see a series of multiple fair value gaps. Now, technically, we did not have that series of multiple fair value gaps, right? We only had one, right, with obviously narrative and logic surrounding it with a high-quality model number 3 target. So if we have a displacement that it's not like quite perfect, it doesn't have the multiple gap sensation, it's not like exactly what I want to see to the T, I can live with taking a setup without checking that off as long as there's at least something entry-wise that is enticing and looks like at least a little light bulb lifetime, like example, blasting through this opposing 5-minute gap, right? So the main lesson I want to get across to you guys, especially those of you that have been trading this model for a while, okay, understand that these two check boxes here are always going to be the least important of the actual setup. Okay, now they're definitely preferred and you usually generally want to see them, but these top 4 are the core 4. You at minimum baseline to take a setup, you're gonna need these 4 right here. Okay, without those, you're just completely gambling and you're not implementing the system, right? It's just entries based on hopes and dreams, right? At that point. So with that in mind, how can we check off the core 4 here? Here was your high time frame key level. Here was your manipulation below 930 opening. Now here is how I found my model 3 target. I'm anchoring the range high from today down to the low. And here is 50% of the range. Here was the first high that you can see above in a premium generated. That's your model number 3 target. Boom. I mean, this shit works so good, man. It's such a good target. Boom. There's your model number 3 target. Premium of the range. Gaps above, as I explained. Beautiful. It's so perfect, right? I can go ahead and check that off. We have a clear drawn liquidity in the form of high time frame gaps inside of a high quality model 3 opposing target. This is prey. Why is this a high quality target? There has to be like an explanation. You have to be able to tell me why. The reason why this is such a good target is because we're preying upon everybody that was FOMOing in and chasing this short as we dumped off one more time. So we're preying upon everyone that has their sell stops jammed above these highs here. Boom. Beautiful. Hourly PO3. And now this is where things get damn good. I can absolutely check this box off. Of course. That's why I took the trade with my live funds, right? What do you guys see right here? Come on, man. Beautiful. Accumulation of orders. Very simple. How do you know it's accumulation? Just look for a sideways consolidation. Boom. Accumulation. Heading into what? Come on, man. 12 o'clock hourly candle opening. Anytime you see high quality, long-winded accumulation prior to an hourly candle opening, always have your anticipation up for a Model 3, especially if you're hitting a key level. Okay, rewind that if you have to because it's important. Accumulation, manipulation below that hourly candle opening. Boom, hitting the key level. Manipulation's finished. Here's the distribution with us inversing that 5-minute gap. I get a part of it. Boom. Accumulation, manipulation, distribution. Abso-damn-lutely. Hourly PO3 is checked off. So, as you guys can see now, we have a happy ending. I just fully walked you through, right, what it means to trade a high quality model number 3. And again, the main, I guess the message of this video, right, that I want you to take away from it is don't demand perfect entries. Demand perfect draw on liquidities and perfect stop loss placement based on structure. If you have those two things, right, inside of a logical narrative based model number 3, you are going to win. It maybe not on the first attempt, usually on the first attempt, but if not the second attempt, you will walk out making money trading model number 3 with a model 3 target at hand, as long as you prioritize knowing the draw on liquidity, stop loss placement. If you put those before, right, having a perfect entry and like not focusing on having a perfect entry, you're going to make more money in the long run because you're going to be more assertive and acting upon more opportunities that do show their hand. If you demand perfection, always like the perfect entry, oh, I need to see this and this and this, it has to be perfect, right? That's good until it's not, right? Because then it gets to a point where it's too much. It sabotages entries. It makes you, pass up on what would have been a good buying point at a nice discount, and then you're buying at a terrible premium price, or maybe you're just missing the move entirely, and then you feel FOMO later on. It just opens the door for so many things. It's better for you just to not demand perfection on the entry, but again, demand perfection on knowing the draw and liquidity in your stop loss placement. Boom. Amen. End of story, guys. I hope you enjoyed this one. I'll be seeing you guys in the future videos and live streams. God bless you guys, man. Peace out.